is talking about inflation.
Inflation.
Inflation, the silent killer of purchasing power, is looming around the corner. But fear not, we're here to help you understand its causes, potential impact, and strategies to protect your assets. Welcome back to Finance Foresight.
In fact, we've not heard inflation talked this much since really the 1970s.
This graph charts the Consumer Price Index, a metric that measures the average change in prices for consumer goods and services compared to a year ago, or more simply put, inflation. In May of this year, prices spiked 5% to reach the highest annual inflation rate in nearly 13 years. Many economists believe that a small amount of inflation, around 2%, is inevitable and even desirable. That's essentially what we've had for the past 15 years before this most recent surge. But these recent increases have some fearing that the US might be returning to the runaway inflation of the 1970s.
No one wants to see that happen again.
So are we returning to the spiraling inflation of the late 1960s and 1970s? Or is today's inflation, as the Fed assures us, transitory?
This is an extraordinarily unusual time.
For those old enough to remember it, the Great Inflation was a period in which the cost of living for millions of Americans soared. From 1965 to 1982, prices for food and everyday consumer items rose dramatically from 2% in 1962 to 15% in 1979. During that same period, unemployment also rose steadily, eventually reaching just above 10%. The term stagflation, an economic condition of both rising inflation and increasing unemployment, became the go-to phrase to describe the period's economic malaise. This was a time when consumers protested rising meat prices, unions members picketed for cost of living pay increases, and long lines for unemployment and gas became commonplace. Here in New Jersey, 10% of the workforce is unemployed. Across the nation, the average is 8%. The main lesson from the 70s is that kind of nagging, persistent,
recurring double-digit inflation doesn't happen overnight. It sets in over many years, and it set in because of a long series of policy mistakes in Washington.
Policymakers are asking how the central bank could let this happen.
Guidance, I think, overall slowed the response of the Fed to the inflation problem last year.
Investors think more price increases are coming. By the Fed's count of inflation expectations, prices will have risen an additional 6.8% by the summer of 2023.
It is going to be very challenging. It has been made significantly more challenging by the events of the last few months.
We need to make sure that the central bank is on the side of everybody in the country.
The big concern is that not only will we have these big increases in inflation this year, but that will lead people to expect higher increases in the future. Because if that's the case, it sort of compounds upon itself.
But fear not, there are strategies you can adopt to mitigate the impact of inflation on your financial portfolio. Here are some practical steps you can take. Diversification. Diversification is your strategic ally in the battle against inflation. Think of it as not putting all your eggs in one basket. Why? Because different investments react differently to economic changes, including inflation. By spreading your investments across various assets, like stocks, bonds, real estate, and commodities, you reduce the risk of your entire portfolio is affected by a single market fluctuation. For instance, when the stock market is volatile, bonds might provide stability, or when inflation diminishes, the value of cash assets like real estate or certain stocks might be increasing in value. Diversification isn't just about minimizing risk, it's about positioning your portfolio. Secondly, consider investing in gold. Gold is a traditional inflation hedge, as its value tends to rise during periods of inflation, as investors seek a safe haven for their assets. These are just a few strategies you can adopt to mitigate the impact of inflation on your financial portfolio. By staying informed and taking practical steps, you can navigate the current financial landscape with confidence. As always, we'll continue to monitor this story and provide updates as they become available. And if you haven't, please subscribe and leave a like for this video. Your support helps us continue our work. Thank you for joining us today on Finance Foresight.